Let's talk some stocks. We got Adobe in focus after a note this morning that is kind of neutral, George. I mean, they literally put the stock like right at a hold, and that might seem uneventful, but when there's a lot of expectations for software companies like Adobe to ramp up their AI offerings, it's a little curious to me to see that the analysts basically see no potential in the stock right now.
Well, I think they're onto something here, OJ. If you just consider Adobe's movement into artificial intelligence, and of course, what's going on with their core creative publishing and digital media software business, I think their acquisition of Figma, which is basically an online collaboration firm, that's starting to manifest into potential accretion for Adobe going forward. But if you look at the estimates for growth for this particular company, and I think this is why HSBC rates it at a hold rating, their earnings growth is expected about 10%, which again, on an absolute basis, is actually really good. But if you consider that its forward multiples trading around 31 times, one would say that maybe that PE is basically 3 times EBITDA growth. So maybe they're looking at potentially a little bit of a valuation call for Adobe, but you have to consider, the profitability of the firm. It's over 25%, at least on a net income basis. And I think if you look at the prospects for Adobe, I mean, if you look at Firefly AI, artificial intelligence integrated alongside their creative publishing suite of software, I think the marketing cloud business is growing, and their e-commerce cloud is also growing. But again, I think they're actually being reasonable here when it comes down to the forward multiple relative to those earnings growth estimates. And I think that's one of the reasons why they rated it a hold rating at 519, which again, if you look at the stock price right now, is effectively where it's trading at.
It's been pretty stable, holding up, bouncing at $500 in this regime that it got to post earnings back in June, held it through the earnings earlier this month. It certainly is not a bad setup technically whatsoever, especially when the cloud sector did take a bit of a hit just this past month as the broad market came off. So Adobe with a little outperformance there. But to your point, I guess just with limited growth potential still, it maybe is not one folks are chasing after. But I don't know. I mean, technically, it kind of seems like it deserves a little bit more love.
Well, I think technically you're actually seeing a nice bounce. I mean, you're seeing all these, bull flags all over the place across the software space, the technology space, and for that matter, the fact that maybe the markets. I think if you consider Adobe, perhaps the call also has to do with this company being more value-orientated versus growth-orientated, and that's not a bad place to be. I think it's a place to consider sort of a stealth artificial intelligence value stock versus a growth stock. I know if you consider NVIDIA, that's still a growth stock, but Adobe is a big AI player, but it's more value orientated. And I think that's maybe where the recalibration lies with HSBC's call.
Okay. And hey, if rates are going to go up and valuations are going to come off in stocks, the so-called value trades in each category you'd think would do a little bit better.
Right.
So maybe that's where we get some of the outperformance the past month here for Adobe. Thanks, George, for the analysis here of the note.